Hello, and welcome to Must Read Research on BofA Global Research Unlocked. In this podcast, we offer quick summaries from the prior week's most interesting and impactful research. I'm Candace Browning, Head of Global Research at BofA Securities, and we're recording this episode on Monday, August 10th, 2026. It's been a summer of extremes. This week, we highlight EPS growth extending its hot streak, rising European energy market risks amid record temperatures, growing AI memory demand following a landmark U.S. listing, and an emerging markets index reshuffle with the potential to redirect billions in investor flows. Let's begin with earnings season, where strong results continue to come in, but the market appears increasingly difficult to impress. With nearly 90% of S&P 500 results in, our U.S. equity strategy team has second quarter EPS tracking 30% growth year over year, and that excludes Alphabet and Amazon investment gains. That's a 76% EPS beat rate, matching the strongest level since 2021. Breadth is also unusually strong. 81% of stocks and 10 of 11 sectors are on pace for positive year-over-year growth, a 94th percentile breadth reading. AI remains the standout with median EPS growth of 28% versus 12% for non-AI related stocks, though consensus expects AI growth to slow to 16% next quarter. That helps explain the weaker price reactions as companies beating both EPS and sales are being rewarded at only about half the historical average. EPS growth is expected to stay above 20% through the fourth quarter, a four-quarter streak seen only 10 times since 1936. But investors may demand acceleration, not just strength. From earnings momentum, let's turn to another market feeling the effects of extreme conditions, and that's Europe's energy market. Europe is experiencing its hottest summer in at least 15 years, driving power usage to the highest level since the start of the Ukraine war, while drought has limited hydro and nuclear supply. Solar output is at record levels due to low cloud cover, and wind has benefited as well. Dependence on weather-driven power sources has increased price volatility and reduced advantages historically enjoyed by nuclear-producing countries, such as France. Natural gas-fired generation is able to ramp as renewables fluctuate intraday. We are raising our Europe gas or TTF forecast on low European inventory, with spike risks above 80 euros per megawatt hour, if the strait is not reliably opened by winter. Power vagaries impact AI planning too, and after hosting more than 20 speakers and 10 events on the topic, the thematic research team suggests that economics are shifting in favor of solar and batteries, where prices are falling below those of new coal and nuclear projects. From the energy needed to power the next generation of technology, let's turn to rising hyperscaler spend and its impact on memory demand. AI memory demand continues to be one of the most visible beneficiaries of the broader AI investment cycle. Vivek Arya, our U.S. semiconductor analyst, now sees hyperscaler spending reaching approximately $1.2 trillion in calendar year 2027. With memory among the areas expected to benefit most from that growth. SK Hynix participates in several of the highest value segments of the memory ecosystem, including high bandwidth memory, LPDDR5, and enterprise SSDs. Simon Wu, our Asian semiconductor analyst, expects more than 300 trillion Korean won of annualized operating profit from the third quarter of 2026. Stable average selling prices through 2027 and 2028, and more than a 40% share in high bandwidth memory and QLC NAND-based enterprise SSDs by 2028. The company's NASDAQ ADR debut raised $26.5 billion US, surpassing Alibaba's 2014 IPO as the largest ever U.S. listing by a foreign company. ADRs typically trade close to local share parity, plus or minus 2%, though some large semiconductor companies have historically traded at premiums in U.S. markets. Finally, let's move from individual companies to global equity markets, where a coming index reshuffle may carry significant implications for investor flows. Index classification rarely makes the front page, but we think the next series of MSCI emerging market reshuffles deserve real attention. Greece is moving into developed markets in 2027. Indonesia and Turkey may face downgrades into frontier markets. And Argentina's return from standalone status looks increasingly real, albeit likely slow if the last 2.5-year process is any guide. The main headline is that South Korea, now 18% of the emerging markets index, may graduate to developed market status. Our flow math suggests Latin America could be a major beneficiary, with a broad reshuffle directing $9.6 billion into Latin America and lifting its EM weight from 7.2% to 8.9%. That would be a meaningful step for a region that represented roughly 20% of the emerging markets index just 2 decades ago. But there is a concentration trade-off. Without South Korea, Taiwan would jump to 32%, China to 23%, and India to 15%. Still, emerging market concentration would remain far below developed markets, where the United States represents more than 70% of the index, with Japan at 6% and Britain next in line at 3%. So from a powerful earnings season to rising energy market risks in Europe, to the accelerating demand for AI memory and potential shifts in emerging market index flows, those are the themes shaping the conversation this week. Thanks for listening, and we'll be back next week.
Bank of America and BofA Securities are the marketing names for the global banking businesses and global markets businesses, which includes BofA Global Research of Bank of America Corporation. Lending, derivatives, and other commercial banking activities are performed globally by banking affiliates of Bank of America Corporation, including Bank of America N.A., member FDIC. Securities, trading, research, strategic advisory, and other investment banking and markets activities are performed globally by affiliates of Bank of America Corporation, including in the United States BofA Securities Inc., a registered broker-dealer and member of FINRA and SIPC, and in other jurisdictions by locally registered entities. Copyright 2026 Bank of America Corporation, all rights reserved.